folks, Dan Frio here, the Mortgage Update. Today is August, I can't even see it, 6th, 2020. So let's get to it. Sorry, this thing is broke and it's driving me nuts. So make sure you can hear me okay. What's happening today? Well, I was surprised, but I'm going to show you we didn't do the wrong thing yesterday when we locked everybody in because we hit certain levels today. We actually picked up a lot of what we lost yesterday, but you're going to see the resilience line that we keep hitting. It's stopping us. So I'm going to get to that. Some job numbers came in today, which weren't so bad, but the biggest thing right now is everybody's kind of on the edge of their seats because tomorrow's job report could play a big factor in what's going on. So let's get at it. Where were we today? The headlines right here is bonds generally consolidated ahead of the jobs report. Now that's coming out tomorrow morning, but let's see what happened today. Great number. But as you saw yesterday, remember we were down 19. I locked everybody before the downtrend. And before any rates were readjusted or anything. So let's go down here. I'm going to try to blow this up today. So for those that cannot see it, again, we hit resistance here. There's a reason for this, guys. Here. Then we hit it kind of here and then here, and we closed it that day. I don't know if you remember, but I can go back and show you that day. We ended up right on the line. Then we started breaking out. But then again, we hit a resilience level here. We hit it here, stopped. We hit it, we exceeded that here and then ended up at the line. We hit the line again yesterday, and that's when I'm like, I'm locking everything I got. It just scaring the bejesus out of me that we're not going to go past this. This is just creating a complete solid floor. And today we are bounced around and we ended up right there. This is kind of cool because it's like this resilience line is basically staying at the ceiling, and it's a halt. So what these lines right are here, we call them Fibonacci levels. And they basically create, right now, this is an artificial floor. This is our ultimate floor down in here, right here, okay? But this is a short-term floor here. This is a short-term ceiling here. And if we break this ceiling and we stay there, this will be the next artificial area that we kind of are sealing. I don't know if we're going to break this, and that's why I, as an educated, I don't want to say this in a bad way, my educated decision was I want to err on the side of caution. I want to be a pig. I don't want to be a hog that gets slaughtered. Sorry about that. So what are we following here? And so let me explain this number here for the newbies out there. And I hate to keep repeating myself. There's a couple videos I watch every night, and the person goes through and they repeat the same thing at the beginning of the video, about the first 5 minutes, the same every time. But I watch it because I want to get to the content. So for any newbies on there, what is this number here? Why do we even care about this number? And we really don't care about this number to a point or any of this other stuff, but it's up here. Okay, this right here, you'll see it says MBSs. That is mortgage-backed securities. This is a bond that trades on Wall Street that is packed with mortgages. And this instrument here is how mortgage rates are determined or created through. It's this with some other levels of different components, risk factors, hedge fund numbers, profit margins, and a whole bunch of other stuff. When it's all added up, it creates the mortgage rate. So why do we watch this number? And again, let me give you some facts behind this. Green, we love green. Green means good. Greens mean rates got better. Red means bad. Rates got worse. So that's the best way to watch this. A green 16 is a good day. We were red yesterday, 19. So basically we're back to square one. What this is the price of a bond. As prices go up, means you pay more for a bond. That means your rate of return or your yield drops. So that means mortgage rates drop because that's the percentage being paid or offered. So we like when this number goes up, but this is kind of scary right now. Why do we keep hitting this resilience level and stopping and stopping and stopping and stopping? Well, I don't know if we're going to break that threshold, and that's why I locked everybody yesterday when we kind of went up. We went way up, we hit it, and then we started to retract very, very quickly. And I'm like, you know what? I'm locking everybody in because I don't like this pattern. And there's different words for different patterns that we follow. And I don't like us hitting this about 4 or 5 times and just having us stop. That, along with there's coronavirus information that's coming out for a vaccine. When the vaccine comes out, it's going to put a lot of good news back into the market, finally. So we're going to most likely see the stock market's rallying, and it's an artificial rally due to the Fed. But I see that it's going to stay or maybe stabilize and go a little bit higher. But I think what's people are going to do, they're going to get more satisfied or more confident or more secure in the position and where they're at. They're going to know, okay, I'm going back to work. I know this, and I know the economy is going to start coming back. People are back to work and all this other stuff. And it's going to start creating better news in the markets. People are going to start pulling out of bonds and putting their money back into the stock market. Thus, if there's less demand here, we're going to see an increase in rates. But the biggest factor here is what the Fed is doing. So the Fed basically has vowed saying, we're going to keep things low and stable. So stable means we could potentially be, if you look at this stability, let's just break this in half. We should be right here trending. So if everything comes out the way I think it's going to play out in the next 30, 60 days, we're going to be back to these levels. You guys are going to be thanking me that I locked you in right in these rates right here. You probably got noticed by us today or a revision of, we call it change of circumstances, or you got a rate alert or a lock alert from us. And if you have in the last 24, 48 hours, if you haven't, you should be getting one soon. You're going to be very happy. Probably almost everybody, I can honestly say there's not one person I locked that the rate was higher than I quoted prior to. I said I'd get you this rate or lower. Almost every one I got lower. So you're going to be very happy once those locks come in play. So this is basically what's happening in the market. A lot of mortgage people, if you follow them, they're going to start talking about the 10-year Treasury. That is not the tool or the instrument that dictates mortgage rates, nor does the Fed. The Fed controls the federal funds rate. Where the Fed comes into play is they actually buy mortgage-backed securities. How prices are established is supply-demand. There's a certain supply, and then the demand is the Fed coming in and buying as much as they need to buy to stabilize the market or push rates a little bit lower. They're the biggest buyers of mortgage-backed securities right now, in tune of close to $6 billion a day. When they start to slow that pace down, you're going to see this kind of drop, and you could possibly see, I would not be surprised, I don't think it's going to come to this extent, but we could see possibly another one of these. Look at the difference where we were here versus here. So anybody that works with me, I have your back. I have your back, and I wasn't locking anybody in here. But I didn't think we'd get this rapid return back. But if you don't use an experienced mortgage advisor, if they locked you down here, it's time to refinance, guys. And if you locked, in the last 6 months or so, let me know if I can get you a better rate. And possibly if the loan is, $200,000 or more, I'd be even up to talk to you about, if you closed, say, 6 to 8 months ago, between 4 and 8 months ago, and you can possibly do it again, we could talk about doing a no-cost refi for you so you don't have to pay those closing costs all over again if you didn't use me. If you use me, I have that vow that I'll waive all your lender fees if you go back through me and refinance. So that's that. The market cap for the day or the wrap up, the Dow was up 185. Jobless claims came in, or the jobless report came in, showed 1.2 million individuals who filed for unemployment. That's 250 less than expected. So that's good news. Here's one thing that most people don't realize. The Pandemic Unemployment Assistance Program, PUA, these are people that are getting unemployment that normally would not get it. So let's say, for example, you're paid a 1099. That means you're kind of a self-employed contractor. Most salespeople They're paid that way. They call gig workers. So a lot of people that get paid, I use a system called Fiverr. And it's a technical, check it out if you need any technical stuff done, like editing, help with YouTube, help with Word documents, help with creating a website, anything of that sort. You can hire somebody on Fiverr very cheap, and a lot of times I get them and they're in Indonesia or Pakistan or something like that. Do fantastic work at a fraction of the pay that it would cost you in anybody, trying to hire an engineer or whatever. So most of those people get paid like contractor work, paid by job, and they're not W-2'd like most people are. Those people usually don't qualify for unemployment. They do now under this program. So the continued PUA claims improved by 70,000 to 13 million. So 13 million people that normally don't get unemployment are getting unemployment. So when the government starts talking about, the government's cracking back on the unemployment benefits and everything, there's a lot of people getting benefits right now that normally wouldn't. I'll leave it at that because I want to leave politics out of this thing. But there's a big number coming in tomorrow. It's the ADP report. And the ADP report was yesterday. The employment numbers are coming out first thing tomorrow. Those could play a big impact in what happens with rates, or if things come in line, we might not see anything happen. But what's taking place right now, and I'm going to show you this right here, and it might even be here. Hold on one second. Here's some alerts that I get. Oh, I think it's right here. Floating ahead of tomorrow's job reports. So everybody's going to be kind of there. If you have a good mortgage advisor, a lot of loan officers don't even have a clue what's happening tomorrow. But if you have somebody that's worth, a pound of salt, they follow this stuff on your behalf. You have a full-time job. You're seeking help getting the best program, the best rate, and the best costs on a mortgage. You work hard for what you do. Let us work for you, by you, with you, to get you all of those. So many times we had a couple people actually send me in their loan estimates in the last day, and they were using a Rocket Place. I won't say the specific word or company. Their rates were about 0.5% higher than we have, and their closing costs were on average $3,000 more than we had. I mean, I'm not going to post it for liability purposes, but I have proof. And they're sitting on my desk as we speak. So that's what's happening right there. The economic calendar we're going to see tomorrow. There's a lot of hourly earnings, average work hours, weekly hours worked, the unemployment rate, and so forth. That's coming out tomorrow, first thing in the morning before the market even opens, right through here. So you're going to see the stock market either open way up or way down. That's my prediction. I don't think it's going to be neutral. I'll be posting this here shortly, so you can follow the daily newsletter. But this is saying bonds generally consolidate ahead of the job reports, and that is first thing tomorrow morning. Let's click over to CNBC and see what's happening there. Let's click out of this. The Dow's up 185. We knew that. Pelosi, coronavirus stuff, huge differences there. Let's see if there's anything in the real estate news that we need to be concerned about. Acquisition may be ahead of rock. No, mortgage rates hit another record low, but they didn't hit another record low because don't follow this stuff, people. Just follow my channel, please. It doesn't cost you anything, and it takes 10 minutes of your time every day to kind of follow this. If you're a realtor, a loan officer, you want to get in the business, you're interested in housing, you want to buy homes, you want to rehab homes, you want to invest, this is the channel to watch. I try to cover all those things. If I can be of any help to you, please, best way to get me, therateupdate.com. I launched this. Our Google Analytics started on Sunday. We're getting thousands of hits. Thank you. That's the only thing I can say is thank you. The best way to get me personally, if you'd like to reach out to get some help, call us at 844-775-LOAN. That's 844-775-5626, or go to therateupdate.com. If you want to get the ball rolling, just hit the Apply Now button right here. It makes it really simple. You can go down and pick the loan officer you want to work with. If you don't have anybody that's referred you or anything, you can choose me, and then you'll get me or one of the loan advisors anyways, because the business business is pouring in and I review every loan, but you might not speak with me directly. And if you really want to, just ask the loan officer that, hey, have Dan give me a call. I'd be more than happy to call you so you know that I'm in the background helping and assisting on every file. One of the things I ask is if you have specific questions or you have, if you're in the middle of a mortgage right now and you want a second opinion, email me. And my email address, my name is Dan Frio. So my email address is D for Dan Frio, which is FRIO at preferredrate.com. So dfrio at preferredrate.com. So I want to just say thank you so much for watching. If you would, please give me a thumbs up. I'm trying to hit 10,000 subscribers by the end of the month. So if you could do me a huge favor and hit the subscribe button, click the bell. For every video that I post, I'm trying really hard to have the title describe exactly what the topic is. I don't try to use clickbait because I want you to say, oh, it popped up. Dan just posted a video. It's something, I don't really care about that one. I'm not going to watch that one. Or, hey, that one, that really hits home. So I want to watch that one. I'm going to go ahead and watch that one. I'd appreciate it if you did that. Here's what I ask for a lot of people. If you're in the mortgage process right now, send me what's called your loan estimate or a fee worksheet. Basically what that's going to do is break down. It's going to give your name, address, loan amount, the cost, and the rate. I'll go through that if you send it to me for a second opinion. And I'm going to say, okay, here's what I can or can't do. There's sometimes if you read the comments and some of the descriptions, I'll come back to you and say, God bless you. What you got is phenomenal. Don't know how they're doing it, but you did a great job. In probably 90% of the cases, I come back and say, you know what? I can beat them on rate. I can beat them on fees. I can beat them on both. So why not go, switch over to me? I'd love for you to do so. That's if you're in the mortgage process. If you want to get pre-approved for a home, please go to the website, click the apply now button and or the home purchase questionnaire. And either way you do it, I'll make sure as soon as you're done, I get an alert. I'll pull it. I'll personally call you or have one of my loan advisors call you. Again, I'm in the background. I'm here all the time. I review every file, every loan, every rate lock. That's what I'm busy doing. So I appreciate you guys using us. If you haven't contemplated refinancing, why haven't you? The rates are basically at historic lows. They're bouncing up and down, but they're right there. So if you're at 3.5 or higher, do something. Or at least look at it. We can go through it. And does it make sense to do it? I have people, sending me their mortgage statements, and they have a $75,000 loan. They can reduce their rate 0.5%. Does it make sense? Most of the time, no. Believe it or not, it doesn't. But if you have we got one in today. It's $1.2 million, and they're going from 4 to 3.5, saving a lot of money. A lot of money. We can keep their payment the same and probably cut off years of their mortgage. And the payment was like $5,000 payment a month. So if you can cut off 3 years, that's a lot of cash. So that's what we do. So I hope you like what you see. God bless. Be safe. And I hope to see you back tomorrow. Same time, same place. Take care. Bye-bye.